You are listening to ChartingWealth.com for Monday, the 24th of August, 2015. This is the total market. That is what IYY represents, an exchange-traded fund. And look at what the market has done. Lots of sideways movement, not a lot of action until our last two-day candle. As we ended the week, the market rolling over, crossing over. We had a portent of what was happening. We saw 4 days ago a big downward move when there was a crossover going down on the MACD. We had already seen a portent of it, in fact, a few days earlier with the derivative oscillator turning over back on the 6th. But a huge power down over the last couple of days. If we revert back to our 4-hour chart, what do we see? We see the crossover between the 19th and the 20th, and then the great plunge over the last 2 days, over the 20th and 21st. As we start the week on Monday, we have had all sorts of panic there in the market, and we want to pay attention. Today alone, the market was down. When I say today, I'm talking Friday, the 21st of August. The market was down alone 2.78%. Now, let's backtrack to the 2-day chart. Look at SPY. It was down a 3% mark today. It crossed over going down again back on the 18th and has gone down for the last several days. We're in a hard down. If we look at the 4-hour chart, we can see where it crossed over there on the 20th. On the 19th, actually into the 20th, and has continued to plunge down substantially. Now let's revert out to the 2-day chart and look at the Qs. This was the one where we had an inkling of what was going on. We saw the Qs rotate over actually way back on the 10th and continue to be in a down move. Now if we, and this is one where we actually saw it occurring in real time, the Qs, even though it moved down on the 10th or so on the big chart, it moved back up on the 4-hour chart, which is the chart that I'm looking at right now, around the 14th. And then right around the 19th, going into the 20th, we saw it cross back over going down, paralleling the bigger chart, which is the best time to get in. Great down play was available there, and we have seen that continued to plunge. All three of our indexes are down. How is gold reacting? Well, we'll start with the 2-day chart. Just what we would expect gold to do. We called this way back around the 10th or so, or actually even earlier if you look at the 4-hour chart on gold. The 4-hour chart is the telltale on gold. It's worked many times over the last few weeks. On the 27th, when gold crossed over, if you would have gotten in then, the highest you would have bought into gold would have been around 105.68, as opposed to gold now at 111. It ended the high, well, the high today was 111.25. Gold was up 0.62% for the day alone. Gold has continued to move up as the markets have moved down. Gold tends to be a place where people flee for safety, well above our 2-day trend line. All the indices then, the market indices, that is the total market, the S&P 500, and the NASDAQ 100 represented by the Qs, QQQ or the cubes, all down. Gold up substantially. That is where we are. Problems in the marketplace, opportunities to make money. Thank you so much for listening to ChartingWealth.com. We love to hear from you. Follow us on Facebook and Twitter. Let us hear from you. Hopefully you are making money as the market is turning. Folks, you need to study. Please go to our website. Watch our short video on how to trade. It is free. It will give you so much great information. You will learn how to follow the charts and study. Listen to us every day. Listen to what we have to share with you. Spend a little bit of your own time every day. You got to do this every day for just a few minutes. Set that side of time. It will pay. Set that time aside. It will pay you great dividends. ChartingWealth.com. Thanks so much for joining us.